Hi everybody. Regardless of how much money we make, taxes are very painful to all of us. And more importantly, if you're running a small company who just made your first year of profit after 2 years of incurring losses, handing that money to the government is something that you'll remember for a very long time. Because you know for sure that that money could be your savior next year when you again incur losses. But while on one side there are people like you and me who sincerely pay their taxes, on the other side, there are companies like Google, Microsoft and Apple who used a genius tactic by which they saved thousands of crores of taxes every single year. While Google saved $23 billion, Apple saved $78 billion and Microsoft saved $13.8 billion in 2017 and 18. If you see, that is more than 2 times the defense budget of India itself. The question is, what is this genius tax evasion strategy? How do they escape the strict laws of taxation system? And most importantly, what are the study materials that will help you understand these tax evasion strategies designed by the smartest minds in the world? This video is brought to you by Vested, but more on this at the end of the video. The answer to this tax evasion strategy lies in something called double Irish Dutch sandwich. No, it's not a sandwich, but a genius strategy by which Google and Microsoft saved billions of dollars in taxes. Before that, let's try to understand the basics using a simple example. You see, if you're a US resident corporation, then you end up paying 21% in corporate taxes. This is a source of federal income for the government. So let's say Google is your company based in the US, which is a software company that is into selling softwares to multinational corporates. Then, while doing business, Google's US revenues for the fiscal year 2016 is $20 billion. Remember, you are only taxed on the profits you make. So, excluding the expenses, the profit for Google stood at $2 billion. Now, obviously, you're extremely happy until you realize that you have to pay 21% in corporate taxes to the government, which is $420 million. Now, this leaves you with just $1.58 billion. But as it turns out, you can actually save this entire $420 million of your profit. The question is, how? Let's take the same company Google that is into selling software. They now set up an entity in Ireland called Irish Google for operating in the UK, and this company is a direct subsidiary of the US based Google. When this is done, immediately Google's tax rate drops from 21% to just 12.5%, which is the Irish corporate tax. Why? Because United States treats the company as an Irish corporation because the tax residency is based on the jurisdiction of incorporation according to US tax law. As in, you will be taxed on the basis of where your company is incorporated, which in this case is Ireland. But this is where the first hurdle comes in. As per Irish tax laws, if this Irish corporation is being controlled in another jurisdiction, then the profits will only be taxed in that jurisdiction. So, since your Irish Google is being controlled by the US Google, then the tax applied will be that of the US. So guess what? Although the parent company of Irish Google is US Google, the US Google cleverly sets up a special controlling company in Bermuda called Bermuda Google. Why Bermuda? Because in Bermuda there is 0% tax. Yes, you heard that right, 0%. So now, since this company is managed and controlled from Bermuda, it is considered to be a resident in Bermuda for Irish tax purposes. So now, you are only paying tax in Bermuda, which is 0, so you end up paying no tax at all. This is the reason why Bermuda is called the tax haven of the world. So the job is done over here, right? $420 million saved? No, hang on. Because this is where another catch comes in with something called the Controlled Foreign Corporation Rules. Because in short, the United States authorities are not stupid. Controlled Foreign Corporation Rules or CFC state that if a US company's subsidiary is being controlled by some other company in another country, then again, they will have to pay taxes in the US. In this case, since the Irish Google is an American company's subsidiary but is being controlled by a company in Bermuda, the taxes will again be applied by law. So obviously, this model also clearly doesn't serve the purpose. But $420 is still a lot of money, right? Well, this is where the double Irish Dutch sandwich comes in. As the name suggests, there are 2 Irish companies and 1 Dutch company sandwiched between them. So let's see how this exactly works out. The first thing that Google needs to do is escape the CFC rules. So this time, they create an Irish subsidiary called Omega Ireland Ventures, which has a controlling presence in Ireland itself. So now, the CFC rules do not apply anymore because the controlling company is in Ireland itself. But if done so, Omega will have to pay 12.5% corporate tax on its profits as per Irish corporate tax, right? So here's where Omega then proceeds to create another Irish subsidiary, Omega Properties, and gives its controlling presence to Bermuda. Now, since this is an Irish subsidiary and not a US subsidiary, it has easily escaped the CFC rules. And what Googly does now is that they sell all the intellectual property like patents, brand names and copyrights to this company called Omega Properties. So how many companies do we have? 3. Googly, the parent company based out of the US, Omega Ireland Ventures, the Ireland company controlled in Ireland, and then Omega Properties, which is operating from Ireland but is controlled from Bermuda. Now watch this very, very carefully. Let's say Omega Ireland Ventures works like a normal company and makes a total sales of $1 billion and generates a profit of $200 million. The expenses over here will be $800 million and profits is $200 million. Here's where they bring an additional expense, which is the cost of patents and licenses, for which they pay $200 million to Ireland Properties. Why? Because they've used the intellectual property of Ireland Properties. Which means what? This company generates zero profits, hence no tax. And since Omega Properties is being controlled in Bermuda, it again incurs zero tax. Why? If you remember, as per Irish tax laws, if this Irish entity or corporation is being controlled in another jurisdiction, then the profits will only be taxed in that jurisdiction. But this is where another hurdle came up in the form of something called the Irish withholding tax structure, wherein Irish resident companies must withhold tax on dividends, payments and other distributions that they make within the country. So in simple words, when Omega Ireland Ventures makes a royalty payment to Omega Properties, they will effectively have to withhold 20% as a part of withholding tax. So just when you thought that Omega had covered it all, you actually incurred 20% tax. But guess what? Here's where the Dutch element comes into your sandwich. You see, there's actually a tax loophole which says that most of the European Union countries will actually allow royalty payments to another European Union company without incurring this withholding tax. So, if you make royalty payment from an Irish company to an Irish company, it will incur 20% tax. But if you pay royalties to a Netherlands company or vice versa, there will be zero withholding tax. In fact, the Dutch tax code even allowed royalty payments to be made to several offshore tax havens like Bermuda without actually incurring this withholding tax. So guess what? Googly sets up another empty shell organization in the Netherlands called Omega Dutch Ventures. And now, the Omega Ireland Ventures pays $200 million of royalties to Omega Dutch Ventures without incurring any tax. And here's where the final stroke comes in. Omega Dutch Ventures then makes another $200 million of royalty payment to Omega Properties. And since this is also a transaction between two European Union companies, even this transaction will incur zero withholding tax. Now, since Omega Properties is controlled from Bermuda, it again incurs the tax of Bermuda's jurisdiction, which in this case is $0. This is how the double Irish Dutch sandwich strategy is used to save hundreds of millions of dollars in taxes. Now, in case of Google, in 2017, according to reports, Google reportedly transferred 19.9 billion euros or roughly $22 billion through a Dutch company, which was then forwarded to an Irish company in Bermuda. I'll attach a link for this in the description so that you understand this better. And it's not just Google, but Apple, Facebook, Pfizer, Microsoft and dozens of other billion-dollar companies have used this strategy to save billions of dollars in taxes. And the double Irish Dutch sandwich is the largest tax avoidance tool in history. There are estimates that say that US multinationals built up an untaxed offshore reserves of $1 trillion from 2004 to 2018. But fortunately or unfortunately, the Irish government came in and decided to put an end to this double Irish Dutch sandwich strategy. So now, you can no longer use this strategy to evade taxes. Before we move on, I want to quickly tell you about Vested. People, wouldn't it be great if you could invest in these growth stories of companies like Pepsi, Apple, Amazon, Google, Netflix and other US stocks? If yes, Vested is a 100% digital, easy, fast, reliable and transparent application that simplifies investing in the US stock market. Vested has features like advanced charting, pre-built portfolios and vested trends that shows you the trending companies among vested users. The best part about Vested is zero commission investing and lowest INR to USD conversion fee in the market via their feature Vested Direct. You can open an account in just a few minutes using this app. So if this sounds useful to you, download the Vested app using the special link in the description. Vested is currently running a special offer wherein if you fund your account using the special link in the description, you will get an additional $10 bonus. You can now have a look at the study materials wherein you will find this and many other tax evasion strategies used by some of the most brilliant minds in some of the biggest organizations in the world. That's all from my side for today, guys. If you learned something valuable, please make sure to hit the like button in order to make YouTube Baba happy. And for more such insightful business and political case studies, please subscribe to our channel. Thank you so much for watching. I will see you in the next one. Bye bye.